Hi, Tony. Thank you for doing the session. You did mention in Q1 that the hard part is over. Are you still holding the same view?
We were highlighting that last year, economists everywhere were expecting a recession and everyone was seeing inflation problems. But as we're getting into 2024, those issues are getting behind us. And we're seeing evidence that consumer surveys around the world are starting to look more confident, and business surveys are starting to look more confident. And we think this is going to have supporting effects for markets over the course of the year.
You also did draw the similarity between 2020s to 1990s. What do you mean by that?
So we feel a lot of similarities in what we're seeing now compared to what we were seeing in the 90s. I think not only is the economic data more vibrant and more stable, but also what we're seeing is that the number of just exciting investment opportunities really looks like the 90s. So that would include the whole AI theme. There's a lot going on in biotech that is highly innovative and exciting, and several other industries. And so the way I see investors behaving and the level of excitement being generated is very similar. And the other thing we say about the 90s is that in hindsight, I think everyone remembers the dot-com bubble popping and bursting. But the other part to remember is it really lasted a long time. It went over many years of strong markets, where as investors, we kept getting surprised by how strong this and long this was lasting.
So this higher for longer and AI story, is it good for Asia?
So one thing we highlighted back in the Higher for Longer paper is that during those periods of the 90s and the 2000s, Asia was outperforming like 80% of the time. And now we've gone through a period of over a decade where Asia's underperformed. And we're also seeing signs of things like global trade and global manufacturing rebounding now. And while the China story is still an issue that I think will be a bit of an overhang and will take years for China to fully rebalance, but what we're seeing out of Asia now is that markets like Taiwan and India and Korea have been able to make all-time highs even while China's dealing with some issues. So I think there's just enough exciting trends in Asia, enough growth in Asia, that I think it's going to be a place that performs well.
It's nice that you run through all the different countries in Asia, the opportunity. Are there any specific sectors that you prefer or you like at the moment?
Yeah, so I think a key theme that we highlight is that really there's a lot of innovation going on everywhere. We're quick to highlight in the biotech area, we have stocks that are going up more than NVIDIA. And the breakthroughs that are going on there, when I talk to clients, they've just never even heard of these drugs or these themes. And so mostly what I encourage investors to look for is some of the forefronts of innovation, and to invest accordingly that way.
Against all this backdrop, what would your recommendation be for investors going forward in the next few quarters?
Yeah, so a key thing we highlight is that in the past year, a lot of our clients, and we see investors globally, have really been on the sidelines to a very significant degree. And that's fair because 70% of the world's economists were forecasting a recession, inflation was a problem. And so investors everywhere were really putting money in fixed deposits and money markets. So I think the first step we encourage is those investors to realize that both stocks and bonds have been beating cash over last year, and that they're likely to do so in the coming year. And that we would encourage investors to seek out these investment opportunities, because really there's a lot going on, there's a lot out there.